Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I'm with Larry Galvin, Principal, Sparrow Family Office Consulting. Welcome to the show.
Welcome, Michael. Thank you for having me.
All right, talk to me about your office. What is a family office? What does it take to be a family office, and what you do with the family office? But first, give us a little background on yourself, how you got into business.
Sure. Well, I'm a transplant to the Dallas area. I'm originally from the Northeast. My background was owning my own broker-dealer, which specialized in the Reg D type of securities. Clients were institutional, family offices, pension funds, those type of people. At the same time, we had an advisory company that advised small private companies on anything from debt to other issues that they would be facing in developing their business and growing it. Okay. So over time, my business partner was 15 years my senior, and he retired, and I took that advantage to move to Dallas and sort of work within the business environment down here that's a little bit more favorable than the Northeast.
Oh, it's great down here. Welcome to Texas.
Thank you.
You're welcome. Now, talk to me about the family offices. Some people, it's like, what is it? How does it work? And what do they do? So bring that part out for the people that don't understand about family offices.
Sure.
And then let's get into the nitty-gritty of how you work with the family offices and separate yourself from everybody else, okay?
Okay. Well, the family offices have a pretty wide definition. I mean, they range from people that have had a liquidity event in their life, some sort of event created money for them, and they might be just happy enough to put it with a private bank, not be involved. Others take that money and then try to, build a business out of it, use it as the next line of capital. The issue I think people have to understand with family offices is materiality. I say if you're really going to run a family office and you don't have at least $100 million, from a cost perspective, it's hard because you have to have the talent. And there's been a push amongst family offices in the last 10 years or so to become more internalized. Instead of relying on a JP Morgan or whoever to manage their money and give them deal flow, to hire internal people and find their own deals and be able to invest in that and create operating companies that create a cash flow for them. Mm-hmm. So what a lot of them have done is they have tried to go out and hire people, like in any private and small firm. What they tend to run into is the people they hired with in the beginning, tend to find their glass ceiling quick. They needed a bookkeeper when they started, and now they need a controller. Right. So what I do with them is I'm sort of your virtual or outsourced COO, and I fix those problems for them. If they need true accountants, I get them outsourced accounting, outsourced tax. Help them with their deal flow and due diligence so that I can lower their fixed costs so they could play in that market. And that's pretty much what I try to do for them.
What do you see as really hot pockets that family offices, and I know it's a big, broad question, are finding interest in now? Because they got a lot more flexibility than your classic investment banking company. So where do you see that trend moving from your perspective in your niche in the family office world?
I can tell you what they're avoiding.
Okay.
They're avoiding fees. Fund managers, they don't really want to put their money in funds. And what they're trying to do, in a way, is create a substitute for fixed income that doesn't pay enough anymore. I mean, if we're old enough and we remember the late 70s and you could make 15% in a money market, a lot of this stuff wouldn't exist because even though you were in an inflationary period, people would put that portion of their portfolio with something that's very safe and pays. What they're trying to do now is find deal flow that pays them as an operating company, whether it's franchises in restaurants, whether it's real estate, commercial real estate or mixed use real estate that generates, some sort of quarterly return for them so they can live and as well as have the investments that also produce a capital gains type of thing down the road. But what they're trying to avoid is, just going into the Goldmans of the world, which there's nothing wrong with Goldman, but to get away from just the pot of what everyone's trying to sell them to find more unique deals. And there's a lot of that out there. It's just having someone who can source it for them.
And that's where you come in.
I help them with that. Sometimes they have a deal that they want me to do diligence for them and say, what do you think? Others are saying, do you know anyone's doing this, selling this or buying that? And I'll go out and research it for them.
Where do these family offices, do you think, get their deal flow from? Because that's the life and bread. They've always got to put their money into something that pays either the revenue you talked about, the income stream, or get some alpha out of it, a longer term play. Private equity is what I'm assuming. But where are they getting their deal flow from?
Depending on what what their particular structure is, some of them will team up and become a multifamily office, where then they can use one or two guys. Let's say 5 families could have one guy that can source them all, and they can all join in the deal or not. The other area that they're pretty good at is they're being hounded probably through their private banks and other people. If they let people know that they're looking for deals,
boom,
they'll get flooded. The trouble is most people don't want to be flooded because, like anything, you're bringing in people that don't even read your criteria. They just sort of like an actor in Hollywood. Just read my script, even though you don't want to do this film. Just read it. And that's sort of what I try to keep them away from, is people like that just coming in with the flavor of the month.
Got it. The evolution of family offices. I've got a buddy of mine, he's got well over 3,000 family offices, probably more by now, but it's kind of like 15 years ago, it was hedge funds. They were the hot thing. And then about 3 or 4 years ago, family offices. And to me, it's almost the same thing, just a slightly different name. That's the evolution. But family offices in its own industry sector, family offices only. How do you see that evolving? Where do you see that going?
Well, where it was, when you think about people that made a lot of money in the hedge fund business, one thing that they always had as a hedge, not to overuse that term, is they were taking outside money in and charging a fee on it. So even if the underlying investment didn't do well, they were just making money. You look at some of the big hedge fund operators that had billions of dollars. Well, you didn't have to make a lot, just charge your even if it was 1% management fee on $5 billion, that's a pretty good payday.
Right.
What's changed, I think, in that industry is most hedge funds were a trading strategy. Something, whether it was a credit strategy, a commodity strategy, whatever. Right now, they're looking for businesses to invest in, which is really an extension of the private equity business. Whether they want to own it or buy a stream of income from it, that's where most of them I talk to want to live. They don't want to be relying on the stock market.
I believe you. Is there any particular hotspots that you see family offices are more excited about than now? And also, in that question, is there a stage of a company do you think is more apt for a family office to look at them relative to, because an investment banking company, it's got to be post-revenue. You've got to have at least enough to come in to what we're pay us for doing our job and putting you together to take you to the next level. And it's absolutely has to be scalable to an enterprise level. Sometimes people have different criteria in family offices. You can make 30x on a private equity deal that pops out in 3 to 5 years through an acquisition. And some people are looking for that kind of a window. Is there an appetite that you're seeing in the landscape that kind of hones in on where early investors can go to family offices relative to getting the door slammed in their face by a full-blown investment banking company? You know what I mean?
Yeah, I think first of all, again, it depends on the sophistication of the family office. If they have the sophistication, they can look at a lot of things. And the deals that you were talking about where they're pre-revenue is really where the opportunities lie.
Exactly.
All right, the post-revenue ones, there's a lot of just funds or entities out there that will lend on some multiple of your EBITDA. So once you get to that point, that's good if that's your business, but if you're looking to get into a business at its ground floor, you've missed it.
Right.
So I've met a lot of the family offices that are more sophisticated tend to use debt structures. They use the phrase loan to own. They want to be in that part of the capital structure, and then if something goes not their way, at least they own, they're ahead of all the other equity. And if it does, then they exercise their rights and take it, their share in the company. But I think there's a lot of trends in that area where they're looking for companies with something like a technology that's patentable or in the process of being patented, something that can't be taken away easy, like, land or a property. Let's say it's a development, but we know that that's the only development of residential in that area and it's needed. They're looking for needs that have to be coming to fruition, not necessarily genius, but it's going to happen because there's a need there. And I think when I've spoken to some of the family offices about future deals, that's what they're looking at. For instance, I'm working with a multifamily office here in Texas, and one of their portfolio companies is a technology. It's basically the next generation of what silicon chips are going to become. It's called a SIP. They're called systems in package because you can only shrink the components that far. And now you put them all on one little wafer the size of your thumbnail, which is basically a computer. Well, that's interesting to the family offices that I speak to because it's got 1 million patents on it. It's an embedded industry. You have, that particular company has a lot of expertise, former executives from that industry. So yeah, that's something they're very interested in. So I'm helping them with various debt structures or equity. We'll see which one plays out best for them. But that's an example of one that clearly they had a vision of what they wanted to do. Now they're looking at other families to share with them on it to avoid the venture capital funds and the bankers running their lives.
That's well said. All right. You as a virtual COO, how do you set yourself apart from anybody else in doing what you do in your industry sector, in your, in the family office?
Well, I think there's a lot of people that consult. I don't know whether people just say, this is the narrow area I live in. And I sort of chose that mainly because I don't think a family office is much different than any other privately held company. You could just say private company consulting, it's sort of the same thing. Mm-hmm. The difference is, when I consult for people, there's truly the family component. They might need help beyond whatever the operating company is. They might need help just setting up benefits just for them and their family. They might need help with a lot of things that JP Morgan or the other big companies just can't. By law, they can't go in and tell them, hey, do this and that because they'd be legally liable. So I can, from a consulting basis, I can navigate that for them and help them in that aspect of their business. Whether it's totally unique, I don't know. I haven't run into much competition, but there's people out there helping them. They just might not brand it as I've done it.
Got it. All right. Thanks for being here.
Thank you.
My pleasure.
Bye-bye.
All right. You've been watching CEO Money with Michael Yorba. Thanks for joining us. And we're going to hear more from Larry. He's going to keep us abreast on what's going on with the family offices. Don't forget, follow us on Facebook or Twitter, like us on Facebook, and subscribe to our YouTube channel.